XAUUSD, popularly known as the gold spot. And on this asset so far this week has commenced on a challenging note for us, as both our buy and sell positions from yesterday failed to meet our expectations. And currently, price action appears to be making another attempt to reach the previous highs amidst a persistently weakened US dollar, which of course is influenced by the declining US Treasury bond yields and anticipation surrounding the forthcoming US economic data. Now, for the sake of those who missed out on our earlier editions so that they can catch up with what we are talking about here, let's do a quick revisit of what we saw here on the 1 hour time frame that led to the decisions we made. Now, at the beginning of the week, we identified a range where price action was confined within the $2,035 level and the $2,030 level to emphasize the prevailing uncertainty in the market at this particular point in time. And usually whenever we have a range like this, we exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, for me, I did enter this buy position here yesterday. Prior to our live session, I did mention this, and I did say that for those of us who missed out, we should have a buy stop order above the structure, which of course never happened for you. Now, we saw our price came to break down the support line at the $2,030 area, which of course triggered a sell position, and we saw price moved about 50 pips in our favor. And if you had moved your stop losses to your entry point, you must have been taken out of that position at a worst case scenario break even. And if you didn't do that, you must have been taken out in a loss on that sell position. But it's okay, the week is still very early and we still have about 4 more days to recoup whatever loss we've incurred so far. Now, during the Asian session, gold gathered some interest from buyers following yesterday's pullback, maintaining stability above the $2,030 zone after breaching that descending trend line we identified yesterday, as you will see here. Remember, this descending trend line was one of the parameters we were using to guide trading activities that was supporting bearish momentum. And we had this ascending trend line we identified on the higher time frame as a yardstick to guide bullish opportunity. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset. Now, for those of us who missed out on our live session yesterday, let me show you what things are looking like on the higher time frame. Now, I will run through the 4 hours time frame quickly, where we took into consideration the character of price action since the beginning of this month of February. And in fact, the first half of this month was more of a bearish momentum, which culminated with that US CPI data that incited a bearish traction in favor of the US dollar. So it was more of a bearish momentum throughout the first half of this month. And as soon as price tested the 1,985, that is the beginning of the second half of this month, we begin to see bullish traction resume all over again. And when we connected the series of higher lows, we were able to identify this ascending trend line, which we did agree at the beginning of the week that we will be using this to guide our trading decisions going forward. And if price remains above this ascending trend line, we shall maintain a bullish bias on this asset, and the only condition that will make us sell this asset is for this ascending trend line to be broken to the downside. And as it is right now, price action is still trading above our ascending trend line, so definitely we want to be looking out for patterns and structures that will support the idea of buying this asset. Now let's scale back down into the 1 hour time frame where we shall be seeing things more clearly. Now, as it is right now, you will see what happened a couple of hours ago. Price action finally broke out of the resistance line to trigger the buy stop order, had a $2,035 area, and has since been trading above that particular level. And of course, I want you to be having your stop loss way below the ascending trend line to give enough breathing space for price action to move around. And this stop loss right here will be between about 30 pips to about 50 pips thereabout, giving enough breathing space for price action to move around. Now at this juncture, we maintain a bullish bias on this asset, and we shall continue to look out for more opportunities to buy if price action goes ahead to break out of the $2,040 area. So we also have a buy stop order above that structure to maximize the potential of this bullish move. So this is our view regarding the bullish momentum on this asset. Let's see how far this momentum is going to go. Now, in as much as we are looking out for buying opportunity, like I always say, we cannot ignore the potentials that sellers can also come in. In fact, look at what has been happening here. Let's see the higher time frame quickly. I want to show you something about the $2,040 area. Now look at the $2,040 area. If we go to as far back as the beginning of this year, you will see how the $2,040 area had been a strong selling niche in this market. Now price action is gradually approaching that area, and of course we saw what happened last week Friday. As soon as price tested the 2040, we saw bearish momentum push price to the downside. And as it is right now, the question going into today's trading session is, will price break out of that 2040, or will the selling pressure persist in such a way that it will lead to the breakdown of this ascending trend line? And in fact, if it breaks down this ascending trend line, and then we will start preparing to sell this asset. So I'm looking at below the 2035 level to sell. So if we have a breakdown, please remember we need a retest of structure for confirmation's sake on our lower time frame before joining this bearish move. And if we actually and successfully join the bearish move, that is after a retest of structure, we should take note of this area around the 2025 level, which happens to be our key level for this week. And one interesting thing about the 2025 is the fact that it shares a confluence with this descending trend line we identified yesterday. Now look at what happened here. We saw price break out of this descending trend line, and from a technical standpoint, we expect that price at some point may come back to retest the trend line in an attempt to continue the uptrend move. So if we are selling this asset after the breakdown retest of that ascending trend line, please, as soon as price gets into the 2025, kindly move all stop losses, secure your current sell position, and let's wait to see how the market is going to react to that level. If we begin to see reversal patterns like double bottom structure, head and shoulder patterns, all we just need to do is mark out our neckline and then buy the breakout retest of the neckline to join the uptrend continuation. However, if price goes ahead to break down the structure, then we will have no other choice than to add more sell positions to our existing trade. So it's a simple setup we have here, and you can see how this $2035 area is going to be playing a major role in guiding today's trading activities. Please mark it out on your chart, and this ascending trend line too as well is going to be guiding both the bullish and bearish expectations in this market. So if price breaks down the ascending trend line, then we want to be getting ready to sell. So this is my view on the XAUUSD for today. I hope I made myself very clear.